and a lot of moves, starting with a new buy alert. That's what I'm calling it, because Josh Brown has added a new stock, and it is Zoom. You've talked about this before. Maybe you've even owned it in the past.
Oh, yeah.
But why now?
Me and Zoom go way back.
Yeah, why are you
I promised myself,
this romance?
I promised myself I would never do this again. So, of course, I did it. Here's the story of Zoom, as I understand it and as I believe things to actually be. This is a company that we use at our firm, Ritholtz Wealth. There's an SEC regulation where financial advisors and other staff are not allowed to use their personal cell phones to call clients or to send text messages with clients. So everyone has to have their own phone number. And this sounds obvious, but during the pandemic, a lot of Wall Street firms got in big trouble for using their personal communication. Now, you can understand why. They were all sitting at home and nobody really had a plan. Zoom's got an enterprise business where they give you phone numbers that you can use. It's an app. All of our employees use it. So that's what got me curious. I wonder how successful this product is, because that's our telephony provider. And they just announced that they now have 10 million users of Zoom Phone. The reason why this matters is because the problem with the stock for the last 4 years since the pandemic is that everyone looks at video like it's this commodity thing, like, oh, big deal, Microsoft Teams, Google Meet, it's all the same. The truth is, it's not all the same. When an enterprise adopts Microsoft Teams, the salespeople flip out because all of the customers they want to call on prefer Zoom calls. Zoom is easier for everyone. So they sort of have an edge in a business that people think is commoditized. Okay, put that aside. If they can build out this enterprise business, of which telephony is only part of it, that's a really big deal. We have now adopted another product that they use called the Zoom Revenue Accelerator. That's AI, note-taking AI, which of course other firms have, but it's becoming so good and so important to my organization that I can't imagine that's not the case for all of their other enterprise customers who are currently using it. I think there's going to be an inflection point where finally they're able to show some growth away from just the video calling. It could be this coming quarter. They're going to report on November 24th. Could be next quarter. Not 100% sure. But the great thing about Zoom is because there's no growth here, and it's just been kind of flatlining mid-single-digit growth, the earnings multiple is 18 times. I'm getting a discount, obviously, to the tech sector, but to the overall S&P, with the potential that they will figure out a growth strategy and it'll finally click. The company's got $8 billion in cash on the balance sheet. They can make acquisitions. They can continue to buy back stock. They can do whatever they want with it. And I think that the risk here is minimal compared to the potential upside if and when they actually hit it.
Why haven't you seen the growth then, if they have this amazing?
Grow.
Well, why?
Because
and why are you going to pay 18 times for no growth?
I'll explain it to you. Because if and when the growth shows up, the stock will get a re-rating. Morgan Stanley just initiated coverage this week, and that was actually their argument. Basically, you're not paying a premium for anything here. You're paying a low multiple relative to other communications and technology stocks. But at a certain point, all of these other enterprise businesses that they've gotten into, if they can start showing actual growth, all of a sudden, this is a stock that people have to think about differently. I wouldn't be shocked if they finally post a growthy quarter or a growthier outlook. This could be $100 in the blink of an eye. Nobody owns it. Nobody owns it. The last thing I want to say here on the buyback or on the flexibility of having $8 billion in cash, one of the problems with this stock, they did all this hiring in the post-pandemic, like every other technology company, and they did something that was really generous for employees, but it screwed up the stock for 2 years. In other words, if they hired an engineer, they said, we're going to pay you $500,000. $200,000 of that is going to be in stock options. Then the stock falls 80%. Mm-hmm. So you either lose the employee or you top that employee up. They chose to top the employee up, give them another $200,000 worth of stock options. That stock option compensation problem has been an overhang on this stock. A couple of quarters ago, the CFO came out and said, you know what? Wall Street is telling us to knock it off. We have to stop diluting the shareholder base. We have to start focusing on shrinking the share count and being a little bit more shareholder friendly and a little bit less employee friendly. I think that's a very smart decision, and that's another thing that could end up showing up if and when the next time they're able to report it.
Okay, so we'll watch it, and if anything, it's a little bit of the flavor, if you will, about what we have coming up today. We have a number of moves, and then we have a debate on the other side of the moves to try and give you as much information as possible.
I think Stephanie wants to buy some.
To make your
I don't
own
like that
decision.
chart.
I mean, you basically
No. You're looking at a 10-year chart.
I know. But even
look at the 3-year chart. It's been at $80 for 3 years.
Steph.
This is just not
Well,
your
the
kind
bet.
of
You're
look.
right.
I think the bet
You're
is
right.
that it's not going to be at $80 for the next 3 years.
Unless they change their name to Zoom.ai, I'm still not.
The Revenue Accelerator is the AI product.
Okay.
We're using it. It works beautifully. My advisors are hooked on it.
What does Sam Altman think about it? That will change my perspective completely.
All right.